All right, welcome back to our second segment, which is the lesson of the week for the week of October 28th, 2023. So let's start with the emerging markets. And this is, again, as of Wednesday's markets. And you can see, again, the sea of red for the week. And then now we're getting more and more markets getting to negative, especially in Asia. So keep that in mind. We see the Argentina up 240%, but was down 14. There was this election runoff. It's not really doesn't bode well for the markets. So just a food for thought. Obviously, we can see Israel. And then now Saudi Arabia actually going to negative. So basically, there are some weaknesses happening, as we can see from all the charts. So these are the 1 year chart. I wanted to compare looking at the frontier markets, emerging markets, different countries, global markets. So you see there's a lot of weakness. Even India, we just broke below the 50-day and 20-day moving average. So these are more for your reference. As far as some ideas, now Indonesia will have their elections, and it looks like from the point of view of price to book and price to earnings, they look attractive, and these are comparison to other economies in the large emerging markets and Asia. And they are going to hold the election again February 14th, and obviously it's the largest really Muslim country and largest one of the largest population in the world. And that is important to understand, but there's still some problems that we are encountering in Indonesia. Now, one of the things is the exports prospects is unlikely. So again, we are talking about palm oil, iron, nickel, cobalt. So you see this country is very important from the natural resources, but again, the election is unlikely to act as a catalyst, so it could stay cheap. So just because the valuation is cheap in the short run, just be careful. But there are some companies which we can discuss later, but just a food for thought as far as what's happening and how the politics play a role. Now, Saudi Arabia is hosting its 7th annual, actually it happened this last few days. And the whole idea was that they wanted to get some foreign direct investments. But it is actually running below what they were expecting, especially they have this Vision 2030. And I just want to share that with you. As you know, they've been pretty smart as they have been diversifying away from oil and energy industry to other industries. So that's very important. The same thing has happened in Qatar. That's been happening in the United Arab Emirates. So that's one thing. Speaking of Saudi Arabia, let's take a look at, this is from the IMF, and looking at what they, as far as the global economic trends. So what has happened, let me start with this, and then we go back to the, they're projecting that the growth will be 3% 2023 and 2.9% in 2024. Now, that was lower than the average we've had of 3.8% from 2000 to 2019. Also, again, inflation is projected to decline this year and next year. You remember, a lot of emerging countries, including Brazil, they started raising rates way before the developing market. So they've been a little bit ahead of curve, but I don't think that inflation is gonna go away. But they are projecting it could be lower. But also we have to remember there's geopolitics around. So it is something that we have to pay attention. But the commodity prices are under pressure still, so that's not going to help the inflation numbers. So let's take a look at what is the outlook, and you can see just as far as we just talk about inflation, what is the projection for 2023 for the world, advanced economies, the euro area, how about the G7, emerging markets, you can see is ahead, and then emerging and developing Asia is better than other arenas. On the other hand, emerging and developing Europe is obviously, Ukraine being part of that, is much higher. When we look at the GDP, this is what we see is obviously no growth in the red, and some growth and very good growth. You see again India being positive. There are, when we look at, for instance, Africa, and then South America, the parts of it. We look at the Brazil. Argentina is a basket case. Even Chile has joined. So Mexico actually projected to be better than United States and Canada. All right. For many people outside the United States and even Western world, rice is one of the most important segments of food. So there are different kinds of rices, but the main, when we talk about global rice, it hit actually a 15-year price high. And there's few factors for this. One factor is the El Nino. The other thing is the export restriction. And what we mean by that is, for instance, you can see like Myanmar. Myanmar is a big, rice user and also a producer. And like, for instance, Myanmar, you can see, one of those countries that geopolitically has had a very difficult time. Myanmar has restricted exports. They have been trying to, because of, again, the restriction in production of rice, because of, as I mentioned, it could be, some people say, because of the climate change, the El Nino, but also, again, other countries such as India has put export restrictions. And country like Vietnam, for instance, they eat lots of rice. So the government has encouraged people to use alternative for rice. So it's affecting tremendously country like Vietnam, and the production has gone down. So it's affecting their again, economy. As you can see, the share of rice exports, India is, it's 41.2%. As a matter of fact, what they've decided, obviously there's a basmati rice there. The government has said only you can do like non-basmati rice exports. So India is first. Thailand and India are very close. So both Thailand and India are big users of rice, but also exports. So that's affecting them, the production. And then we have Pakistan, USA, China, Myanmar, as I said, and Cambodia. So, and then you can see, corn being the largest production in the world, has different kinds of uses. And then there's wheat and rice. So you see a lot of developing countries, they depend on wheat and rice. So anyway, and you can see what has happened to the price since, and then when we look at on a yearly basis, this has been really increasing. All right, so move on to lesson of the week. So I mentioned this end of October. So this study was done by IBD and Eric Curl, who is a co-author of Life Cycle Trade. He's noticed that has the most follow-through days, and that means that things really change. The institutions, all of a sudden, they come in when they see is that there is a support, and there's a lot of turnarounds happen in October. That's why I want to discuss like this week's lesson of the week. Generally, a lot of corrections happen. If you are a student of history, or some of you might have lived through it, we've had a lot of actually crashes happening in October. Now, September's is the worst month, but October is the most volatile month. And one of the reasons, it used to be more so, during my, portfolio management, I could see that from the institutional side. A lot of mutual funds, their, fiscal year ends end of October. So they have to come out with the report. So they have to do the rebalancing. So sometimes they sell the things because they want to get rid of, again, the things that they didn't want to have their portfolio. They buy things. So that's why it's important to pay attention to October. Obviously, when we looked at the charts, there's a lot of damage done. But pay attention to this idea of follow through. And again, follow through is, as I mentioned, shows that there is a new stock market rally. It's attempting, and when that happens, there's a good chance that it will continue. And basically, this is historically done. I think it was to 2014 or so. But what you can see, the number of the follow-throughs and which ones stuck, and that would like the big turnaround, and they let's say the market bottomed, for instance. So you see in January out of 19, there was 6 of them that succeeded, and February was one of the worst, and May being another one. But percentage-wise, we can see that October and December are the best, but October has the most of them. So we've had 35 occurrences, and 13 of them were the beginning of something. So you go back to last year, last October 2022, you could see what I mean by that. We bottomed in October. Now, is that the case now? We only got 2 days left, Monday and Tuesday, and let's see what happens. But I thought this is interesting study that was done. I'm gonna move away from October. I'm gonna come back to that, so keep that in mind. The other thing is we are looking at the S&P, and I went back and I'm looking at this past year and well, the last 2 years. Last week we talked about the 50-day moving average, number of stock S&P stocks, the percentage of them which are under their 50-day. This time I'm looking at the 200-day moving average, which is huge institutional support, and only 24.6% of stocks are above their 200-day moving average, which is a sign of weakness. Now, that's damage. It could continue going down, but also times like this, like last year we had, it bounced and we finally bottomed here. It tells you now there's nothing else left to be sold. It was just really oversold. So watch for this. I use this, to find, is there any type of a reversal happening? So we had it in June, and then you see what happened in October. So, but this has been pretty weak and started, the peak was in end of July, if you recall. So going back to October, for the last 14, 15 years, I've noticed, if you buy the last 3 days of October and hold it till the first week of December, markets, it has been positive. I think it was like 15 out of 15. There's another saying that if the last 3 days of October plus the 2 days of November, if the markets are up, so we have, Friday we're down, so if we have Monday and Tuesday, and then Wednesday and Thursday, if you finish strongly, generally that means the year will end on a positive note, and we will have actually a positive year-end rally. So again, these are based on history. That doesn't mean it will repeat itself. Just could be more of a sentiment, more of timing. We talked about the holiday season and the consumers, but also you have to remember we cannot discount obviously the geopolitics, what is happening. So remember that, but also in the past, we've always had some type of things going on. So it's not unique that we have this Middle East situation or Ukraine situation. But anyway, it is playing a big role. It's the mind of a lot of people, but that's just something about October. Something completely different. looking at, we've talked about industrial revolution, and we've gone back and we look at the farming industry, and this was a study done by Morgan Stanley, and it shows that from 1900 to 1950, there was a 45% drop in number of employees in agriculture business. It was huge. I mean, you're talking about corn and soybean, and of course, the Great Depression didn't help the matters. But what happened, we went down to 4%, and this is the chart. The reason I want to share this with you, we go through these revolutions, and obviously right now, everybody talks about artificial intelligence. And is that a white collar revolution? Remember, we've had robotics, and we've had the companies that manufacturing things with the machines. So we don't have typewriters anymore. We don't have instant cameras anymore. So basically, is AI starting a revolution? And that one is more on the intellectual side. So just a food for thought. The other thing I want to take a look at is this came to my attention, looked interesting. I'm a big fan of ratio analysis, and we have a video on this, so if you like to, it will be interesting to look at it. I like to see the price of things like real estate, if I bought it with gold, or if stocks, what is the ratio, or crude oil and gold relationship. So this goes back, this is on a monthly basis, and I go back about 20 years. And of course, we peaked in 2011. And basically, I look at the chart, and it looks like this year we've broken, and we did it just again, we've broken above that trend line. Does that mean that gold is going to be getting stronger than the stock market? So that was in more of a monthly long term. Then I want to look at the weekly, and this goes back to 2020 peak, and I looked at the trend line. Are we on a weekly basis? We just broke above that. You can see the relative strength is stronger, and we see the MACD is breaking. So just a food for thought. Is this a new beginning for gold? So time will tell. Or is this just a temporary, it's one time, like for the next few weeks, we'll find out, things will work out in the Middle East and things go back. But as a chartist, you look at these things and you find them interesting. Also, with this whole debacle in Washington, D.C., finally, the Congress has a Speaker of the House. Obviously, spending, and we have November 17th, again, the government shutdown and budget comes into the picture. Want to look at basically what is happening from the income side, revenues, how the government makes money, and what is it going out. So you see individual income taxes, the social insurance, retirement money comes in, the corporate tax. So these are all the incomes coming in. And this is all the outlays. So 6 point for 2023, these are what's going out. Obviously, Social Security being the top one, health, Medicare, national defense, and then income security, net interest. So basically, this is what goes up. This is what comes in. So what you have to pay attention, this is the deficit. This is what is not coming in. So we have about $1.7 billion of deficit. And that's the question that, we have to resolve this one of these days, and we keep kicking the can down the road. So how do we do that? So obviously, you want to reduce this, some part of somehow cut the expenses, but try to increase some of this. So to get to equilibrium. So are we there? Which we are not. So that's again, the problem that has been happening for many, many years, regardless of who's in charge. So anyway, I just thought that might be an interesting study of the economy for you. So thank you so much. This is end of our second segment. I hope it was helpful, and we will go to our third segment, which is our trade.